Hey everyone, Robert Fischer, Keller Williams Realty. I wanted to give you a quick real estate update. A lot of people have been asking questions right now since we've been seeing so much in the stock market. You know, the stock market dropping 1,000 points, and everyone's starting to ask a little bit more questions. What's going on with the market right now? I'm not an economist, so I want to just throw that out up front. But we do listen to a lot of very smart people. We do a lot of residential real estate, and so we get to kind of see really what's going on out there in the marketplace. And we actually get to track what most people can't see and what the media can't advertise, which is that micro data. And I'll start talking about that in a little bit. What spurred this, because we've actually been feeling this for 3 months or so, and kind of educating people about what was going on. And then last week I had the privilege of listening to Gary Keller again, and kind of getting his insight on what the market is doing. And I mean, he actually, and again, nobody has a crystal ball, but just giving you some insight, because a lot of people are looking at the data and saying a market shift is inevitable. It is coming. We are about to be in the middle of a shift. We don't say it doom and gloom, because I'm actually an optimist by nature. In our area, in the Austin surrounding area, is a very, very, very strong area. But a lot of the micro data and a lot of the people that are looking at the true data, it is showing that a shift is coming. And so just keep that in mind. And the other thing people tend to watch is real estate, and I guess stocks too, tend to go in about a 7-year cycle. So 7 years we tend to go up, 7 years we go down, 7 years up, 7 years down. Depending on whether you're talking about the media time or whether you're talking about the true time when the market started going down, we're at the end of a 7 to 9 year cycle where the market has actually been going up. And we've been kind of watching this for a little while and going through all that, so just kind of keep in mind. The other thing is, before we kind of dive into it, anytime you're looking at any market, it's the hub city will be the last place to be hit. So I'm really almost talking to the suburbs to start off with, because when there's a market correction, because there's always going to be market corrections, right? We started in the downturn, so we know what it takes to sell a home when the market's up versus when the market's down, and all those kind of things. So keep that in mind. But when you know that the market is something's happening, the market's going to start to go down, it'll hit the suburbs first. The further you go out from the hub city, like the further you go out from Austin, for example, is the more that you're going to start to feel it. And then your more expensive homes in the suburbs, they're going to feel it first, and then everyone else will start to feel it. And then once that wave is hit so strong, eventually the hub city will happen. They will start to feel a little bit more too. My one disclaimer on the front end, which Gary Keller was talking about, this could happen. We don't think it's going to happen, but every once in a while, there could be where a new economy comes in, and because it's a global market or all these things are happening, there's a chance that the 7 year cycle could actually, we have this global economy, this is what's going on, and it could actually reset the 7 year uptrend where it was reset because all this other stuff was going on, then we could keep going up. So there's a chance that could happen, but most people are seeing all the data and saying, I don't think that's the case here. So just keep that in mind. So keep in mind what the stock market's been doing. Keep in mind it's been 7 to 9 years, depending on when you track it, that the market has been going up. The other thing that people overlook is the Feds love to have the interest rates around 6%. That's just a healthy spot. That's where the economy is really, really thriving. They have been trying to raise interest rates for over a year now. So just when you really look at that, but they haven't been able to. I mean, they've gone up a little bit, down a little bit, and kind of stayed, but people are saying we're not at historic lows, we're at hysteric lows. I mean, there's not a lot of money there to be made, and what's going on, and they're keeping it low for a reason. And so, without getting too much into the details, when you keep interest rates low, generally what will happen is inflation will start to increase. But on the other side, inflation has not, it's remained low as well, and so they're running out of weapons to keep the economy high. So just when you look at that whole thing and between interest rates and inflation, I mean, it's a big deal. Someone was asking me in Round Rock the other day, like, what's the inventory look like in Round Rock? One of the biggest suburb of Austin, and look at Round Rock, Cedar Park, Georgetown, I mean, there's all of us, right, are out here. How much inventory do we have? Well, at the beginning of the year and all that kind of stuff, I think we had less than, on average, less than 300 homes on the market. It was weird. I mean, there was not normally, and when the market was flat, we were around 800 homes on the market. If you look at today, if you include active contingent, because a lot of times people don't always take those numbers out, so just know you can always run numbers a couple different ways, but we're just over 500 homes at any given point now just on the market. So you go from 290 something to 500. I mean, just in knowing those numbers can fluctuate by 30, 40, depending on how you're running those numbers, just keep that in mind too. But that's a big increase. So, and that's just one city. But when you kind of look at those, people don't realize that the homes that were the more expensive homes in the market, anything over $400,000 for the most part, are sitting a lot longer. There are a couple outliers that, we had some of these that were a one story on a half-acre lot with a pool, even in kind of the quote-unquote luxury pricing. Those, they were selling because it's just such a rarity to get something like that. And so those were flying off the market, multiple offers, still kind of getting those. But everything else in between, especially on a higher price, they're sitting a lot longer. They're not going as quickly. They're having to do price reductions. I mean, I watch the market every single day, and I'm seeing the number of price reductions that come out there. And it's we just look at it and say, gosh, there's something that's going on there. And we're watching it, and it could be a blip, and it could be we're going to go on our way back up. Or, there could be that, there's things are actually getting hit, and we really need to watch that. The other thing I like to look at and I like to track is look about new homes. You look at builders. So builders always lag behind. Think about that. When the market was going down, builders were getting out of the market, and then there was no new home, because they couldn't get in there. It was too risky for them. And then when the market started to go back up, there were no new homes available. So when you look at that, gosh, there's no new homes available. This is what's going on. And they started building like crazy just to try to catch up with demand because there was so much of it. And so they're catching up. Inventory's going up. And then, this is where it's hard, in my opinion, to be a builder, be a developer, because then when the market turns, think about it. You have all this product on the ground that takes 6 months to 12 months to build. When the market turns, and it does turn fast, they still have all this inventory, all this stuff build that they have to do. And then that's when they start doing incentives. They start doing price reductions, buyer incentives, all these kind of things. They're talking to realtors like crazy. And that's what's going on right now. And so, again, it's not horrible yet. It's actually still, it's still considered a seller's market, but we're starting to watch these trends. We're starting to see the builders come out there. They're talking to realtors more. They want to do all this, and what's going on? They're giving more incentives because they're starting to feel, and we're having builders come to us and say, "Hey, what are you seeing? What's going on?" Especially in the suburbs. One other asterisk I will say too is kind of what I said in the beginning is Austin will be stronger than most markets. I don't have a crystal ball, but I don't think we're going to end up like Detroit. We're not going to end up like on the east or west coast where they start to go through these 50% up swings and down swings and all that kind of stuff. So just keep that in mind. Normally Austin goes a little bit up, a little bit down, a little bit up, a little bit down. That's just kind of where our wave is, which is what we're comfortable with and we like. The other thing that you might start to see too is that, which is a little bit contrary to what we're saying, but we have all these people moving to Austin because the job market is so amazing here, and so we're diversified. Another reason why our area is really good there. But as other markets, job creation and everything started happening a little bit more, not as many people had to move into our area. And so just kind of keep that in mind too, is that, that's why you might have felt a slowdown. But now again, people are looking at the market internationally, and they're also looking at the national market of what's going on, and some of the people are starting to see the writing on the wall. Again, who knows where that goes, but just I want to educate you on what we see every single day. So when I look at this, our goal is always to serve our clients. And so whether you're on the seller side or buyer side, we just want to give you the information. So when our sellers come to us and say, hey, we want to sell or we don't want to sell, like if someone says they don't want to sell, knowing that we're aggressive for them when they do want us to sell, but if they don't want to sell, we're the first one to give them a high five, and it's not about us, it's about you. And so if you don't want to do it, then that's awesome. On the other side, when they do want to sell, we want to give them this information and say, if you're watching these 7-year trends, and you know that we might be at the beginning of one now, or 6 months from now, or a year from now, who knows? Getting in and selling on the front end of that is a lot better than selling on the back end of a downtrend. Does that make sense? And so we don't ever do that from a fear factor, because we're not very fearful, because we were born in a down market, and that's where we thrive, because we were aggressive. We love to go after it and really push for it and everything. But if we're looking at this from a real estate financial advisor, again, we're not economists, but just looking at all the information that we're getting from people, this is your largest asset. And so you need to make plans based on your next 2-year, 5-year, 10-year plans on what you want to do for your family. And so when I look at this, I just say, just look at the whole picture. Look at the data that's out there. And if you are one of those people that, hey, we need to sell today, you say, hey, look, we need someone that's aggressive, that's going to go after it. We need to make sure that you're pricing properly for the market, and probably maybe even ahead of a market now, which is, we've been pushing market we've been going $10,000, $15,000 over market so much lately because that's where the market's been. And to see it quickly kind of come down and start to change, it's like, whoa, we need to start adjusting. You need to make sure you're staged right, and you make sure you have the proper upgrades and everything as well. So just keep that in mind. And when you're in an up market, pricing a little bit over market value doesn't really hurt you as bad. When you're in an up market and you don't stage your home, it doesn't hurt you as bad. When you're in an up market and you don't have the right upgrades, again, you can get away with it because it's a frenzy. When that frenzy stops and the market starts to go down, you need to price right, you got to have the staging, you got to have the right upgrades. I mean, that's just, I can't say that enough, to where we've kind of been spoiled in the last 7+ years actually. Man, we don't have to do everything that we used to have to do when the market was flat. So keep that in mind. The other thing that's really interesting is when you look at the paradox of a buyer right now. Last time the market went down, prices went down and interest rates went down, which means value was awesome. Value was like, man, this is a great time to buy because you're buying at low prices and you're buying at low interest rates. Our interest rates, when you look at them today, they're as low as they can really get. I mean, they can inch down a little bit more, but it's not, we're next to nothing. I mean, it's unhealthy. So when the market does correct and it starts to go down, we can't bring those interest rates down much more. And so keep that in mind, because here's the other stat that I think one of our mortgage brokers told us that, is they said, look, every time that the interest rates increase 1%, that decreases a buyer's buying power by 10 or 11%. So a $200,000 home would have to go down to $180,000 in order to absorb that 1% increase. And this is what we do know, is that the Feds want to increase rates as soon as they can. And so it's going to be a little bit different when we do go into a downturn. And again, in our area, I don't think it's going to be horrible, but we are going to correct a little bit. Eventually you have to. Prices will go down, but interest rates don't have the room to go down where they were. I mean, we're running out of bullets to fire out there to make sure to kind of fuel the economy a little bit more. So just, if interest rates have to increase, just know you're going to have to see a greater than 10 or 11% decrease before you're actually going to see that value, if that makes sense. So in my opinion, it's still a great time as a buyer to get out there. And here's even better. If you were one of those buyers that was on the sideline because you were missing out, 6 months ago when we put a listing on the market and we got 7 to 15 offers and we were going through them and you got beat out by, another 14 offers, you're not really going through that now. There are certain price points you're going through that. Don't get me wrong, certain areas, certain price points, certain products. But for the most part, you're not seeing that as much. So keep that in mind as well. So this might be just the exact time for you to get back into the market. So I hope this is helpful. The last thing I'll talk about is seasonality. People are always wanting to know, okay, Robert, so is this the bad time to sell? Everyone went back to school. Here's a couple of things to kind of know, is people did go back to school. All the looky-loo buyers that were just trying to find the perfect home if they were going to sell or buy are probably not going to be on the market anymore. However, you also get the same number of looky-loo sellers that were just saying, hey, we're going to put it at a premium. If we sell, great. If we don't, then so be it. Those people tend to come off the market as well. So what you'll have left are the sellers that want to sell and the buyers that want to buy. So in that case, you might get a little bit less showings at that time, but the people who are looking, they have to buy. They're serious buyers. So that's a good thing. So be encouraged on that. I know we're going to still get more inventory for the builders. They're going to start pushing those out and they're going to start doing more incentives. Keep that in mind. But if you have to sell, this is something you have to do, you're going to want to look at all the things that I spoke about before and say, man, if I do these 3 things, it's time to get aggressive because I want to catch this on the front end. Hope this is helpful. And again, as an optimist by nature, there's always something we can do to help get you the most value for your home. There's always something you can do to kind of go after and be aggressive. And aggressiveness is what you need, especially in the market shift. But if you have any questions whatsoever about what's going on, any kind of data, even if you just want to know and you're not in the middle of buying or selling, our goal is just to be a real estate resource for you guys. Again, it's Robert Fischer with the RJF team, Real Estate with a Servant's Heart.